focus on the lesson. Live in the hills, but it still get a spread. Started with a live, but it still reinvest it. Fear how I feel, then you feel like it's a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but the sound like progression. Farmer never plans if he waits for perfection. Finger to the down, hold it.
All right, ladies and gentlemen, I hope you're having a wonderful day. I have a very important update, and it's not Elon buying Twitter. It's not Cole's getting another offer. It's not Libya and oil or Coca-Cola beating earnings. Even though all those happened today, that's not what it is. We need to talk about Europe and China. So, a lot of big things happened today. I'm going to give you an update here with that EWG play, but I have two different theories that I need to share. Pretty much with this being a big earnings, you have 1/3 of the S&P and half of the Dow Jones all reporting this week. Pretty much by the end of this, it could create something big. And then the news we got out of China today, it was absolutely insane. So we did make a couple of plays today. We got a bunch of pre-earnings or post-earnings tomorrow. I got a bunch that I need to go over, and we have all of that. But let us start here now with China and Europe. Pretty much, this is where we're going to start. I don't know if you watched the Europe video. This theory is still in play, and even our EWG is a lot lower from when we got it. We got scammed there with the volatility, but it doesn't mean they're over. We are down on those plays. Depending on how this week plays out, we will see. Pretty much what I'm trying to tell you, I still believe that Europe is at a threat, or they are at the mercy of the energy situation, and those are the developments that we're waiting for. But I was initially thinking that Europe was going to get clapped first and then the United States, but now fast forward to today, China, they are in the mix. Literally, the Shanghai Composite, they were down, I think, like 5% today. Another one, the China comp, the Shy Comp 300, they were down 6%. It was a very bad day, but last time you saw the Chinese Shanghai Composite drop, that was February 2020, before we even freaked out about COVID. Think about that. But this is a big deal. The Chinese yuan keeps weakening, but now the race is on. Literally, who is going to crash first, or who is going to have a bigger headwind? That is what we need to talk about. So there's a bunch of other things that we could go over. Primarily, the same reason that would cause Europe to crash is the same thing that would benefit if China crashed. Pretty much, if China goes down, that could benefit oil, which would ease some of the Europe stuff. But this is where I'm saying that's where it gets confusing and we don't know. That's not my main point. What my main point is how does the global market react after United States earnings? So here is theory number one. Earnings season somehow manages to surprise, or people don't really trip out too well or too bad. Again, it's not the best, it's not the worst, but the market's able to go up. China keeps dropping, and then quickly, pretty much by the time a couple days after the Fed announces what they're going to do, they're going to raise rates. People are going to say, nah, it's not that big of a deal, and then boom, things will come down. That would be the short-term scenario. Literally, earnings does good, SPY goes up, China keeps going down very, very hard. Maybe it even brings Europe down with it. We'll see what happens here with any of the news related to the Russian oil embargo. But what I'm saying is then quickly after the Fed on May 9th or May 8th, or maybe like May 10th, give it 2 days, the S&P will come and catch up with China if they keep going down during this earnings season. What I'm saying is that China goes down, earnings season, we ignore it. That's the longer term, or that's the shorter term. Now for the longer term scenario, what could possibly happen? Earnings isn't the worst. It's kind of good. It manages to slowly grind up or not go too crazy, but then China pretty much keeps going down from now up until around August, when we start to see oil kind of go crazy again. And that right there would pretty much, it'd play out just like the 2015 flash crash. And then maybe at that point, we see weakness out of Europe and China. But this is what I'm looking for. Yes, these are theories. I can be wrong. I'm totally okay with that. But why I'm keeping this in mind, I understand the logic a little bit. I'm trying to say, notice the impact we're going to have this week with earnings, and then shortly thereafter, it leads into a big moment with the Fed. The bonds are still at a key level. Now we have China and Europe on the chopping block. If they start moving and doing historical stuff, again, China has not been this low in a while, and then their currency, last time it weakened in a 1 or 2 week period like this was literally 2015. That was the initial flash crash that we hit, which was insane. So This is all nuts. This is now what I have on the table, but literally Europe and EWG, it's still in play. We are waiting to average down on that one, but again, we're in a decent position now. It all just needs to move a little bit more, but what I'm saying is that now we have China in there, and which one is going to get affected? This may very well be the new story, or just now keep an eye on China, especially in reference to everything going on, even the conflict, inflation, Fed, all of that. It is now very important, and if China keeps moving like this, it will eventually be hard to ignore. Remember that, okay? But that's the main thesis. Hopefully it helps out. If you got any questions, comments, disagree, agree, you let me know in the comments below there, baby. But as far as the plays, I made a couple of different ones today. I think I started this morning off with Qualcomm. Those plays ended up going like 25-30%. I grabbed the May 20th 165 calls. Only grabbed one for about $50. Again, keeping it small. Pre-earnings play. TXN is tomorrow. And why did I go ahead and play the Qualcomm? Chip makers were killing it. AMD was really high in the morning. I was like, all right, pre-earnings run up. And if you look at the premium, this is like the lowest it's been. And honestly, this got me on a lot of calls today. So we got to watch out for it. But did a small play. I liked it. Pre-earnings run up. We'll see how that plays. The second play that I made today, I grabbed a Microsoft put, another one, and this is a pre-earnings play coming into tomorrow. Pretty much by end of the day tomorrow, I'm expecting premiums to get juiced up, and I will sell before, or I will sell a portion, get my initial investment back, and maybe get some free earnings plays, but these ones are way far out the money, so I'm probably going to take all of the profit. But I grabbed the May 6th, next week, 190 puts. I grabbed 50 of these at 8 cents. They closed up a little high there, but you could see 8 cents was the same price as the day before. And then I also had the 190s. That was the play we made on Friday, reacting to the Army news, and I got those at 7. Those went up over 100%. So again, all pre-earnings play. Microsoft tomorrow after hours. That was the second play. And then the third play, I went with a Coca-Cola post-earnings play. And now, keep this in mind. I mean, here is our list for tomorrow. I'm going to go over the companies that report in the morning, because literally, that's our watch list for the morning. I promise you, it's a big list. But I went for the Coca-Cola. We waited a couple of hours. Coca-Cola did very good. Their earnings was killer. There were some spots that people didn't like, but again, market was getting clapped today. Coca-Cola was kind of in the gutter. It chilled out there. The options were substantially cheaper than the day before. Again, this is the whole like perfect post-earnings play that we want. Pretty much, I got the same play in the morning. It was going for $1. Even by the time we're at the lows of the day, it was cheaper than 2 days before. Thought that was good. I grabbed one there at 40, closed up like 32%. And you can see the contract is actually still red there on the day. So not too bad. But that was the third play. And then finally, I went with the Amazon call. It was a little big. It was like the cheapest it has been. Amazon was holding good. Again, they got the split and all that. But I'm assuming if there's anything positive, if we get that IV and these contracts are already at the bottom, I'm just hoping I get lucky here with IV. So these are a gamble. These are risky. But I grabbed a next week. Again, little amount of time. Going to be flipping these by the end of the week. 3,400 call. Grab one at 770. Could have got them cheaper. The spreads were large, so we'll see how it plays out. But those were the only other plays. But now, as far as tomorrow, those post-earnings plays that we talked about. So UPS, I held the play. We were up on it like 30% today, and then it slipped to like 15. We were up even more throughout the day when it was lower. It was a put there, but I have till June. Down with riding it, but definitely going to be watching UPS for post-earnings depending on how they do. Pepsi, this one may inspire Coca-Cola. Again, Coca-Cola did good, but the thing there was guidance. Coca-Cola did really good for first quarter, but they didn't increase guidance. If Pepsi does, that's going to be money right there. So watch out for that. GE, that could have a big effect on industries, but again, that's one I think 3M, that's going to be a big mover. If the home builders surprise again, interest rate sensitive, that will be another one tomorrow. RTX, LMT was a good post-earnings runner. If you remember earlier last week, it went down and then shot up, so going to be watching them be a low for earnings. And then Arch, I'm going to be looking at ARLP and then seeing what information we get from that commodity supplier, and that should really give us our information. But those are all post earnings tomorrow. Aftermarket, Microsoft, Google, GM, CMG, Visa, Enphase, Texas Instruments, QuantumScape, Citi, SHX, FFIV, HI, Navi, Juniper, and Chubb. Again, Visa, Texas Instruments, I think those will be big. Qscaler may surprise. Again, that think can move a lot, but Visa and then the MasterCard Sympathy, that one's still in play. Microsoft, we got the pre-earnings. No calls yet, but I may want to grab some in the morning if they're cheap. And then Google, I only have an old play, but I might want to double dip, especially leading into the announcement there, because if they do good, then they got the split. That may very well be last chance. So we'll see what happens. But tomorrow is all earnings. This week is key. If China drops 6% today and we closed up green, this is telling you how important earnings is. So get ready. A lot of things are moving, but the market's focused. And right after we get the majority of these companies, it's next week with Powell, and it's going to get crazy. So I hope you're ready. But that is your watch list, ladies and gentlemen. Make sure hydrate, healthy, ready to go. Make sure post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shine. I need you to remember, do not despise the days of small beginnings. It's crazy. If you do one little thing right in your life, it could last you a lifetime, baby. So let's go. You only got to get rich once, baby. But I love you. I'll see you in the morning on stream, on YouTube, on chat. It don't matter, baby. We gonna be there. I love you. Goodbye. Was that weird? Okay, it was weird. Okay, goodbye.